Good afternoon, everybody. My name is Barry Wood. I'm the Assessment Division Director for the DLGF. Hopefully everybody can see my presentation. Today we're going to be talking about geothermal systems, excuse me, solar energy systems, solar farms, and wind towers. And if the course goes like this morning, we'll have plenty of time this afternoon for questions afterwards. So the first we're going to talk about is geothermal systems. And basically what geothermal does is it uses the Earth's heat or groundwater to help heat or cool dwellings. And a geothermal system can be, excuse me, independent or it can be combined, also known as a split system, with existing fuel sources like a gas powered or gas fueled furnace or HVAC system. The geothermal systems can be deducted from the assessed value. First, it has to be certified by the Indiana Department of Environmental Management, IDEM, and also the taxpayer must file the necessary paperwork, which is the Form SES and WPD with the auditor's office. The no heat adjustment for geothermal heating does not apply for a split system. So in case you've never seen what it may look like, here's a picture of a house with a horizontal piping system, and we'll talk about the different horizontal, vertical systems in a minute, but just wanted to give you an example of what it looks like to see the in-ground system before it's obviously covered with sod. So basically the way it works is, if you could look at the picture of the house on the left, in the winter months, the colder months, the heating system will circulate inside a loop system. It'll use the heat exchanger using the natural heating from the earth to provide heat and warm air into the house. And then in the summer months, when it's hotter out, it will reverse what it does, and the heat is expelled and the cool air is funneled into the house to keep it cool. There's 4 different types of geothermal systems that we'll discuss. The first is the horizontal loop system. So that picture I just showed you of the house a minute ago was a horizontal loop. And basically the piping is they're buried in trenches about 3 to 6 feet deep. The other closed type of system is a vertical loop system, and this is where maybe there's not enough ground to have a horizontal piping system, so the piping is drilled down into the earth, as you can see, ranging from 150 to 400 feet deep, and it's installed using a well drilling rig. The open system uses a pond loop, and that's where if there's a body of water in nearby close proximity, the piping is submerged and used in the water, from the water in that situation. Another similar situation is that there's a well water, an underwater ground supply, and this is used directly to make the system work. So there's a closed loop system, which I mentioned a second ago. This just means that it's a continuous sealed loop instead of being open, and it can be either, as I mentioned, horizontal or vertical. In terms of some definitions and things, one is that it's a geothermal heat pump. Basically means it's an electrically powered device that is used to help heat or cool a structure. All these devices are for devices installed 40 years ago or sooner, going back to 1981. And so it's just used to produce electricity or generate heating and cooling. A heat exchanger is one of the key components of a geothermal system, and this is a device that transfers the heat between 2 physically separated fluids or mediums different temperatures. One could be a liquid medium such as groundwater or an acceptable antifreeze solution. An open loop system is basically one that looks or uses open water, as I showed you, to say like the pond or the well type discharge process for the water in the geothermal system. In our reassessment, real property assessment guidelines in Chapter 3, we do have definitions that define what a closed loop system is. And then we also define what a horizontal loop system is. And as you can see, it consists of, as I mentioned, trenches that are 4 to 6 feet deep and up to 400 feet long. Final sentence in there indicates that as a general rule for a horizontal loop system, it requires approximately 500 to 600 linear feet of underground piping to service 1 ton of system capacity. And we'll talk about tonnage and how that relates to the assessment of the system. A vertical loop system is defined there as a general rule. Again, could be more, could be less, but as a general rule of thumb for a vertical loop system, it requires approximately 125 to 150 linear feet of underground piping for 1 ton of system capacity. So we've talked about the open loop system and the open discharge system or the return well system. And many of these geothermal systems or heat pumps are equipped with an internal auxiliary electric heat plant to make sure that, when it's either extremely hot or extremely cold, that it's still able to function properly. Some of these, I mentioned, some of these could be used in conjunction with an existing furnace system that's fueled by, say, natural gas or coal, whatever the case may be. And these are referred to as a split system. Obviously, a split between the two different types of systems. You can see in the middle, it says the structure's base furnace and distribution system shall be valued and assessed as part of the real property assessment. So if you think of an existing heating and ventilation, air conditioning system, it's going to be part of the real property assessment. The no heat adjustment for geothermal heating does not apply for a split system. So in some instances, you could indicate that there's no heat, but if it's a split system, this does not apply to that. In regard to collecting data for geothermal systems, you can see that the technology is based on the same principles as it's an air pump furnace, as a regular furnace. Basically, it's trying to get the house, cooled down or the house heated up depending on the season. In our guidelines, we do provide the different data collection codes for geothermal systems. So you can see you would list the property as either having a horizontal closed loop system with a distribution system, one that is without a distribution system, a vertical closed loop system, an open discharge system, and a return well system. Again, identifying whether or not it has a distribution system or not. In regard to the tonnage rating, this is how we actually measure to see how much does it take to heat or cool a certain amount of square footage. And common sense says the larger amount of square footage in a house, the more tonnage or larger tonnage amount would be required. So the tonnage requirements for a 1,500 square foot home are going to be obviously a lot less than something if you had, say, a 4,000 square foot home. As general guidance, again, this could vary, but generally speaking, 1 ton of geothermal heating and cooling is needed to service approximately 600 to 700 square feet of a structure. So if you think about it, if you had a 1,500 square foot home, you would probably need at least 2 tons to heat the house. In our guidelines, we do provide different tonnage ratings. You can see it ranges from 2 tons all the way up to 6 tons. In some cases, especially larger houses or properties, there could be 2 or more separate geothermal heating and cooling systems in existence. And when you have that and you go to do the data collection, basically is you're taking the largest rated tonnage system as having the distribution system, and the remaining system or systems is having no distribution system. So for example, in this case, the structure has 2 separate horizontal closed loop geothermal systems. The first is rated at 4 tons and the second is rated at 2 tons. So when you're collecting the data, you list the 4-ton system as a horizontal closed loop system with distribution. And then the second system is listed but without distribution. So if there's a situation where you have 2 or more separate systems and they're both equal, say in this example, they're rated at 3 tons, you list both systems separately and with distribution. There are commercial structures that do have geothermal, so if you do that, you would do it the same way you would handle comparable residential systems. Obviously, it'd be a lot larger, probably based on the size of a commercial structure compared to a residential structure. As far as pricing the geothermal systems, cost schedules in Appendix C are formatted by the type of system and the tonnage rating of the system, and then also whether or not it maintains a separate distribution system. So when you go to price it, you would look at seeing if it's a horizontal closed loop, vertical closed loop, open discharge, open loop, or return well open loop, and then using the system's tonnage to help select the appropriate base rate. And then also with distribution or without distribution. For depreciating geothermal systems, the appropriate grade is found in Appendix B, and the depreciation tables rely, much like all the other real property improvements, on the variables of age and condition. The age of the system is obviously determined by the difference between the year of construction of the geothermal system and the depreciation date. And the condition of the system will be the same as the dwelling it serves. So even though it may be newer, if you have the condition for your property, for your house is say good, then the geothermal system's condition will be rated as good as well. For depreciating commercial geothermal systems, in Appendix F is where you would find the depreciation schedule for geothermal systems. And this combines age and condition to determine it. And much like you can see, it's in the same manner that you would use for residential, except in this case, it's commercial. In our rural property guidelines, we have the pricing, the cost schedules, and Schedule G, G1, and it's based on the type of system. So in this first case on the left-hand side, you can see it's a horizontal closed loop system pricing, and the system tonnage shows 2 tons, 2.5 tons, all the way up to 6 tons, and then it shows with a distribution system and without a distribution system. So if you had, for example, a 3-ton system that was with distribution, the assessed value would be $16,300. If you were to say it did not have a distribution system, then it would be assessed at $13,600. On the right-hand side of the screen for a vertical closed loop system, again, it's based on system tonnage and whether or not it's closed or open. And you can see if you just do a quick comparison, contrasting it with the horizontal, the vertical is going to be priced a little bit higher, and that obviously goes into the cost of being able to install the vertical looping system into the ground. For open discharge systems, over on the left-hand side, you can see the dollar amount. So say a 2-ton system that's with distribution would be assessed at $8,900. Whereas without would be $7,600. If it's on a return well open loop system, the prices are a little bit higher than the open discharge system. And if you compare these to the two closed systems, you can tell it's obviously a lot less, and that obviously that's dependent upon, or it's based on the water availability. So if you're an assessor, how do you determine what kind of geothermal system is in place? Well, obviously it'd be quite hard to tell from just if you were to walk up to the property to see. So most likely place you could get information is from the taxpayer. They would hopefully have a purchase order or permit that shows, how much cost, how much what it was when it was installed, the type of system it is. However, sometimes that might be difficult to find out. So you may, if your county has a permitting system, that might be able to provide you information. Plus, if the taxpayer has filed for a deduction, they would have to have the system approved by the Indiana Department of Environmental Management. So IDEM has a list that you can check with. Also, the tonnage could also be estimated by the amount of square footage. So if you knew it was, say, a 1,500 square foot house, you could probably estimate that a system would be at least 2 or 2.5 tons, just based on the square footage of the house or the property. So if you have a split system, where you have a geothermal system and a HVAC system that uses fossil fuels or gas, how do you handle that? How do you treat that on the property record card? It's basically you would value it or show it in the summary of the residential improvement section, and the depreciation is similar to the dwelling based on the effective age, grade, and condition. But as I mentioned before, the condition should reflect what you have for the dwelling. So we're going to switch gears now and talk about solar energy systems. And basically, as you can surmise, an energy system that uses the sun's rays to provide electricity to a dwelling, or in this case, we're going to talk about it being used for solar heating and cooling. It's valued similar to geothermal systems, but in a variation from the geothermal systems, the valuation can be based either on an independent system basis, or you can do it on individual components. And we'll talk about those in a few minutes. Much like the geothermal can be deducted from the assessed value using the form SES/WPD, but the system must at least have a collection unit, a storage medium, and a distribution unit. Plus, it must not be a passive system. And we'll talk about a passive system in a minute or two, but basically a passive system would be like a greenhouse or a sunroom. There are 4 different types of solar heating and cooling systems, and in our guidelines, we show them as types. So the first one is a type A, And this is going to be the largest of the four. As you can see from the description, it's 30 square collection unit of 30 square feet, storage medium consisting of either a 120 gallon tank for a liquid system or with a rock surface of 400 square feet. Type B is a little bit smaller. The collection unit is 25 square feet, and it has an 80-gallon tank for liquid system or 300 square feet for an air system or a rock system. The third type is a type C, and this is smaller yet. It's a 20 square feet for the collection unit, and the storage medium is either 60 gallons for a liquid system or 200 square feet for an air system. The final one is a type D, and this is less than 20 square feet for a storage medium and either a 40-gallon tank or rock surface of 200 square feet or less. In our guidelines, we show the different types and the rates for it. So on the left-hand side, you can see if it's an independent solar system. If it's a type A, the liquid system would be $17,900. For an air or rock system, it would be $21,000. And then if you were to look at the component costs of an independent solar system, the type would be $30 per square foot or per unit of $1,800 for a type A. In regard to the storage medium costs, you can see type A is obviously the biggest and most expensive. At 120 gallons, it would be per tank cost of $500. And if it's a rock storage, say if you're looking at type A for 400 square feet, the cost per container would be $3,600. In regard to the units, solar distribution units, you can see it includes the cost of pipe loops, transfer pumps, etc. And the total cost for those, say type A would be $15,600, and it would go all the way down to a type D that would be at $1,400. So like with geothermal, how can you tell what kind of solar energy system the taxpayer has? Probably going to find it, you can see from three places: the taxpayer, which would probably be your best bet, because they obviously would have a vested interest to make sure that their solar system is assessed fairly and accurately. The second source would be permitting, if your county has a permitting system. Then the final source would be if the taxpayer applied to the auditor's office on the form SCS/WPD. Going or looking at the house, obviously you can tell, are there solar panels on the roof, or are there freestanding panels that you can identify? I do know, or I've heard, that in the state of California, for example, any new home that's being constructed or built must have a complete solar panel for the roof in construction. And that's something that's relatively new. Certainly it may take a few years for that to catch on here in the Midwest, but at least in California, houses are being constructed now with solar panels on the roof, the entire roofing system, instead of just say 1 or 2 or 3 solar panels that are mounted on the roof. In terms of the valuation of it, any qualifying solar system would be used. Value would come from our cost schedules in Appendix C, and also the Appendix G are for the commercial properties. As I mentioned at the start, for the solar energy systems, it must contain at least a collection unit, storage medium, and a distribution unit. And if you have a passive solar system, it does not qualify as a solar energy or heating or cooling system. There are a couple of definitions that may help identify or define the solar energy system. The first is an air system, and this is something that basically may be referred to as a rock system. I mentioned the rock system before, but it uses pebbles or rocks as the storage medium in the creation of the energy. Control devices are basically the switches and wirings necessary to operate the system. For the January 1st assessment date, the depreciation date will be January 1st, 2022. Energy transfer equipment, that's equipment that transfers the thermal energy from the collection source to the storage medium. As you would expect, if you have a containment vessel, it's going to be insulated. That's to make sure that you don't lose the energy that you created or generated. Opposite of the rock system is the liquid system, and this is basically it uses a liquid as a storage, as the transfer agent between the solar collector unit, the panels, and the storage medium. As I mentioned a couple times now, the passive solar system is a greenhouse type enclosure, and that does not meet the qualification standards of a collection unit or a storage unit or storage medium and a distribution unit. A solar collector is an assembly or structure designed to gather, concentrate, or absorb direct energy, solar energy. So you think of typically solar panels for that. Solar distribution unit, and you can see there are several things that go into that. One would be the ductwork or the fans, heat exchangers, pumps, and then the plumbing. And then a solar medium, final definition is the material in which the energy is stored. For collecting data for solar systems, basically the cost schedules in Appendix C pertain to the pricing that is separate from the base heating system. And you can see the last sentence in that paragraph. It's important to remember that structures containing a base or reserve heating system and a separate solar system must be charged for both systems. So I mentioned a couple of times that qualifying solar heating and system must have at least a collection unit, a storage medium, and a distribution unit. And we've talked about it a couple of times, but there are two basic types of solar systems: the liquid solar system and the air system. This goes into a little bit more greater detail in terms of how the liquid system operates. And then the air system defines how it operates. When collecting data for a residential solar system, the cost schedules in Appendix C contain the base rates. The schedules are arranged so that either as a system type or the value of the components you can be identified. You can identify those types of components. And when you're putting it on the property record card, you want to put those into the summary of improvement section. If you're valuing it on a system basis, you can see record the system in the use column and the type of storage medium in the construction column. If you're doing it on an individual component basis, then you can see you would record each type, including the variables, either a liquid or a rock, as separate line entries within the section. For commercial solar energy systems, the main thing to take into account here is the square footage of the property, or the total surface square foot area of the system's collection unit. That's one of the key differences between the commercial and residential, is looking at the total surface square foot area. In terms of pricing a solar system, it's going to be, priced accordingly, and you can see how it's going to be put or shown on the property record card. Again, you're showing what type it is, whether it's liquid or rock. Then take the base rate, much like we do with everything, multiply it by the location cost multiplier and enter the result in the adjusted rate and replacement columns. So it's really nothing different than any other feature or improvement for a property. As you can see, as far as to record the individual system components, you would show in the summary of improvement section, you would show, in the use column, the amount, the base rate, multiplying it by the location cost multiplier, and then entering the results in the adjusted rate and replacement costs columns. You would record in the next row for this, you would record again the storage medium, construction type, the distribution unit. Again, this is fairly routine, simple, much like what we do with a lot of other improvements when placing or showing the values on the property record card. For pricing commercial solar systems, you identify the total square footage of the system's collection unit and multiply that by the applicable base rate. It's found in Appendix G. One key thing here is in some situations you were asked to interpolate between rates, especially if you don't have the square footage does not match exactly. For commercial solar systems, just choose the rate that is closest to the subject square footage. As far as depreciating solar systems, use the residential dwelling depreciation table for the appropriate grade. The age and condition obviously factor into it. The age of the system will be unique for each system. Much like what we did with the geothermal, the condition is the same as the dwelling it serves. So if the condition of the house is good, then the condition for your solar energy system will be good as well. As far as depreciating commercial systems, you would use chart number 3 found in Appendix F. Again, looking at the age and condition to arrive at the depreciation system or depreciation percentage. I'm going to switch gears now and talk about solar farms. I know throughout the state, practically every county, it seems like, has been approached or will be approached about having a potential solar farm project or development in your county. And solar farms and panels could be assessed as real property, could be assessed as personal property, or it could be assessed as state distributable property. And one of the general rules of thumb is that the project generates power from the solar panels and it's sold, that power is sold on the grid, then we, the DLGF, would be responsible for assessing that property as state distributable property. And there's a link you can see that shows or gives more information about state distributable property. We, the DLGF, would only assess the property that is directly used to deliver the service. If a taxpayer does file a state distributable return with our office, the taxpayer is to file all locally assessed personal property in their return. We'll talk about this in a little bit, but the same applies with wind towers. For property that if the taxpayer is in one taxing district or participating in the net metering feed-in tariff program, they can file locally. So basically, for solar farms, the local assessing official would assess all personal property not directly used to provide the utility service, as well as all land, buildings, and building improvements associated with that utility. Typically, the only property that would be treated as real property would be security fencing, possibly, and then also if there's any buildings nearby or part of that solar project. In some cases, situations, you may have solar array panels mounted on a roof or freestanding, and these would be deemed to be business personal property. They would not be considered real properties because unfortunately we do not have cost schedules to value these types of structures. And depending on the situation, again, it could be a situation where the taxpayer could file and report their personal property on a self-assessment business personal property return. If a taxpayer, and not a business in this situation, a residential taxpayer installs solar panels on the roof of their home, these can be valued as real property. And unfortunately, we do not have cost schedules to value these. So how do you arrive at a value for that? One is if you have a building permit system, you could use the amount listed on the building permit system. You could contact the taxpayer and find out what was the cost to construct these. Maybe they have invoices to come up with the value for this. One of the key things is what is the use of the solar panels? If they're being used to provide just electricity, supplemental electricity, say for the house, then it's going to be assessed as real property. If they're using it to run equipment, say maybe it's a taxpayer, not a business, but maybe they have a barn and they're using the electricity generated to the power a generator or something, that's probably going to be personal property. And then if they do have enough electricity and it's sold on the grid, then it's going to be state distributable property. If the solar panels are in one taxing district, they can file locally on a personal property tax return. If they are in multiple taxing districts, but they have a feed-in tariff or net metering program or agreement, they can choose to file locally. And last spring's General Assembly legislature, House Enrolled Act 1348 was passed, and one of the key provisions for that was the valuation of land. And basically for that, the legislation said that the land portion shall be assessed at an amount that does not exceed a solar land base rate for the region in which the county is located, or the property is located. So what this means is if your county is approached by a solar developer and they say, we'd like to reach an agreement, we want to have predictability in our assessed value, we want to reach an agreement on what the value of the land will be, you can do that. However, it cannot exceed what the base rate is that we establish on an annual basis. December 1st is the date that we are to disseminate the land values for the following January 1st. So if you have a taxpayer coming in, a developer wanting to do a solar panel or a solar farm development, you can reach an agreement, but it cannot exceed the rate that we set on an annual basis. One of the key areas or things about the solar land rate is that this will apply to the land obviously underneath the solar panel, but also the land in between and immediately surrounding the solar panel. So we've interpreted that to mean if you have a fenced in area for the solar development, all the land within that fenced in area would be assessed using the solar land base rate. Doesn't matter if they have livestock grazing or if they're trying to grow crops between the solar panels, or having bees or whatever the case may be. Even though there may be some semblance of agricultural use. It's strictly going to be the solar panel or the solar land rate and not an agricultural land rate. The legislature divided the state up into 3 different areas or districts. You can see the North District, the Central District, and the South District. I had one assessor ask me about, they thought that their county more closely aligned with a different district based on their proximity. They were one of the border counties, and they asked what's the process to be able to be switched into a different district. And since it's a creation by the legislature, it would take a legislative fix to move a county into a different district. So December 1st, we disseminated our first memo for the land values. So we using the 800 property class codes is how we determine the median value for the solar land. And when you're using this new solar land, you're to use land type code 84, and that's for land underneath the fixed property or the utility grade solar energy installation facility. And that would be in your CAMA system is land code 84. So for January 1st, 2022, for the North District, the base rate is $12,870. For the Central District, it's $13,000 per acre. And then for the South District, it's $5,250. And that's all explained in our December 1st memo that we distributed. Finally, we're going to talk about wind towers. And you can see the definition of a wind tower is basically taking the energy produced by the wind to produce electricity. However, you can see also that the General Assembly specifically excluded from that definition a device that is provides electricity at wholesale or retail for consideration other than a person who participates in a net metering program offered by an electric utility. So the wind tower is going to be assessed as state distributable property, but not the land. The land would be assessed locally by the assessor. We'll talk about that in a minute. The company is required to file their annual report. It should be April 1st, not March 1st, but they're required to file their annual report with us by April 1st each year. And much like all of the other state distributable property, we will review the assessment and then allocate the value to the appropriate taxing districts, depending on what's reported on their UD 45, which is their annual report they file with our office. For wind towers, the assessment is based on federal costs less federal depreciation. And as I indicated before, you can find more information about state distributable property on our website. As far as the land portion of a wind tower assessment, it's classified as industrial land, and the rate is set by the county. We, the DLGF, do not set the land base rate. That would be done typically as part of your land order. And the best comparison to use would be what you use or what you value for a cell phone tower. And typically, if you think of a wind tower, if you go north on I-65 toward Chicago, in White County, Benton County, you can see the wind towers, but there are also some other wind tower developments over on the east side of the state, say like in Randolph County. I know there's a wind tower development, but typically the land area for individual tower is going to range from about 1/4 of an acre to 1/2 an acre. And this would not include any roads used to say servicing the tower. Depending on the parcel and its use, it could be assessed as secondary industrial land. Again, this would be a local decision made by the assessing official. And secondary industrial land is basically land use for purposes that are secondary to the primary use of the land. We do have in our guidelines valuing commercial and industrial acreage. So I mentioned with the solar, the same applies with the wind. Most likely it would be state distributable. However, if they are in one taxing district or in a net metering feed-in tariff program with another company, they can file locally. State distributable assessments are based on federal cost less depreciation. So if you had say a $100 million investment, depending on the federal depreciation, it could have a wide range in terms of their assessed value. However, at a minimum, the 30% floor would apply. So even if you had a $100 million investment for a wind tower project, at a minimum, they would be assessed at $30 million. So that wraps up the general portion of the presentations. Here is my contact information. If you have any questions or need additional information, email is typically the best way to get a hold of me, but certainly if you have a phone call or two, I'd be more than happy to try and answer any questions. So with that, Jenny, do we have any questions?
No, we do not have any questions at this time. Just a housekeeping item, because we did have some of these questions come up this morning. Allowing some people to enter in anything if they do have questions at this time. This is good for 1 hour of CE credit. If you have watched this one or any of the prior ones this year and want CE credit for it, please fill out the CE form and submit that to Donna Bratcher here in our office. We do not send out certificates for those for completion, but please fill out those forms. You do have a few more weeks to get those into Donna to have that put onto your record. If you do need a copy of your CE record, please follow up with Donna and she'll be happy to provide that to you. And if you have any questions, please feel free to reach out to us. You can reach out to Barry or Donna or myself, and we'll be happy to help answer those questions or get you what you need. But I don't see any questions, but we will stay on here for a few more minutes in case anybody has any questions for the presentation.
Jenny, either I've explained it very well and everybody understands it's 100% completely, or everybody is asleep, or a combination of the above. So we don't have any further questions. I'll give you your Christmas gift from the DLGF is 10 minutes of your life back that you had already allotted for the webinar. So with that, Jenny, if we don't have any questions, I think we can go ahead and say thank you to everybody for participating and happy holidays to everybody.